It's a top that trade day. Joining us now, pro trader Knuckman with bullseyeoption.com and Phil Flynn, a Fox Business News contributor. Guys, round number one, tip tricks. People are turning to social media, TV shows, and articles online for tips on what to trade. What would be a strategy to know when it's a legit tip?
Well, any trade's worth doing as long as you have a trading plan. You've got discipline. So it doesn't matter your source. Now, I'll use those more for finding a restaurant than I do on stock plays, but I use an indicator that actually measures interest, which you could do on some of those online issues there. But the indicator I use finds smart money accumulating positions, kind of like when you see a lot of interest online in one individual stock.
What do you mean? If you can't trust the internet, what can you trust, right? I mean, you just Google something and it comes up.
It must be
true. But, we're kidding about this. But really, I think when you look at the internet, you look at this show, you look at the Fox Business Network, really the individual investor gets better information than they ever did before. I mean, Back in the olden days, you had to call your stockbroker up. He had to do the research for you. Now you have the power. You can get good information and make better decisions, and don't take anything you hear on TV or on the internet blindly, but it can open up your mind to opportunities and do your homework, but you have better access to get ideas, and that's a great win for the investor.
We are idea people. Now, not all our ideas fit everybody's trading style. We're idea people. Then you can investigate and find out if it fits your needs.
Round number two, it's an option. What's the most common way new traders lose money in the options market?
I think sometimes what they do is that they end up buying options that are way far out of the money. But that doesn't mean that you shouldn't do that once in a while. Because once in a while, Alan's laughing a little bit, but, I've had a trader, and he had a strategy to buy quantity out of the market, quantity of options, have more of something as opposed to something closer to the money. When you get a big move, then the payoff on those options are a lot more. So you might have 20 of something, versus one of something if it makes a big move. The problem is the odds are much better if you're closer to the money.
Good point. Yeah. So if you have a bigger position, and these out of money options, obviously you have a lot more risk, but it's a bigger payoff. So that's a balance that you have to make. But I think people buy too little time. They buy options. If they think something's going to happen in a month, you should buy 2 months. If you think something's going to happen in 3 months, buy 6 months. Take time out of the equation because options will melt in your hand like an ice cube. And that is very, very, very frustrating.
Round number three, people, places, or things. Is it a good idea or bad to consider the antics of a CEO? I had a friend call and say, hey, should I dump my Tesla shares? I'm not too sure about Elon Musk. What do you have to say?
So years ago, Elon Musk did no wrong. Obviously, we've seen what's happened with his Twitter debacle. He's suffering, but investors aren't. Actually, investors did very well because the takeover price made people a lot of money. Take a look at Goldman Sachs. Some people don't like the fact that the head of Goldman Sachs is a DJ and wastes some of his time, mixing records. So, it's a personal thing. I'll trade anything, anytime, any direction, as long as I can get in, get out. And like we talked about, there's always opportunity. So try not to hold a grudge.
I actually, I'm getting back in the vinyl, so I'm all for the old DJ thing. But I'll tell you what, I think it can work both ways. I think you have to look at the CEO because a lot of times a CEO can make or break the market, right? But I'll give you the flip side of that. As you know, I've been a big buyer of Tesla. I owned Tesla many years ago when it was at 80, and we had made a huge profit on the stock. And then I got nervous, when he started challenging the CEO and things like that. And so I sold a big part of my position, and I regretted it later because I made a rash decision, on a short-term situation. I think you have to look at the overall company, the vision, and the CEO, and don't get shaken out because of one headline.
Here's your bonus round question for today. It's ticker time. Which one is the true ticker? FOMO, risk, or loss?
I'm going to have to say the risk.
Loss.
Oh no, the answer was FOMO, but you did a great job anyway, guys. Go to businessfirstam.com for where to see our show on TV.